Good morning, good evening, good afternoon, and a warm welcome to all our attendees who have joined us for the Tech Mahindra Investor. I hope you and your families are safe and healthy. This year, we have witnessed major disruptions to global businesses. However, it has proved to be a fertile period for digital transformation and experimentation. It is with this thought that we outlined the theme for this year's Investor Day as Experience the Future Now. We witnessed accelerated adoption of digital technologies, and the fact that we are meeting virtually today is one of the many changes that we have embraced this year. For the next few hours, you will get to hear from our management team on the big bets on technology, capability buildup, and how everything comes together for us on what we like to offer as human-centered experiences for our customers. Our MD and CEO, Mr. C.P. Gunnani, will commence the day, followed by presentations by our management team that has come together to brief you from across the globe. However, before we move on, a few housekeeping items to ensure a seamless connected experience. We have an interactive Q&A session with the entire leadership of Tech Mahindra towards the end. We would urge participants to use the raise hand feature during the Q&A session and get in the question queue. We would encourage participants to also come on video and interact with our management team. At the end of the session, we would like to get your valuable feedback. There is a form that will present towards the end of the session. It's also available on the event website. Lastly, we'll have all the presentations and the recording of this session uploaded on the Investor Relations website. With that, and without any further ado, I would request CP to start the proceedings of the day. Over to you, CP.
Hi, good afternoon, good morning, good evening, wherever you all are. For us, this unprecedented crisis, which pretty much stuck very rapidly, very swiftly, and impacted almost all our operating theaters, which is all the 90 countries, I would say was a very rude wake-up call. And your company, at that point of time, which was early March, when it became very evident that we are in for a journey where nobody can define what the ultimate finish line would be. We literally, the whole management team got together virtually and looked at all the possibilities of what the business impact can be. We obviously did a fair amount of scenario planning, but what motivated us, I want to repeat what motivated us, was this statement of Winston Churchill: never let a good crisis go to waste. We were pretty fast approaching our quarterly closing. Overall, the results did not look that great. And we knew there were two ways to deal with it. One is to be a wartime general, or the secondly is close your eyes and assume that the crisis will go away. Obviously, the team that I am lucky to be part of does not believe in closing your eyes and assume that the crisis will tide over. So the people rallied together. People rallied to assess the impact. People rallied to look at what are the opportunities for all of us we have, what has we promised to the street in the past, and what is it that this crisis will help us navigate. I think when we looked at all the possibilities, it became very, very clear that it is not about strategy. It is going to be about the organization. It's going to be about the processes. is going to impact people, and it is going to impact what we would call our execution capability. So when we put all these wheels together, we did realize that Tech Mahindra has the fundamental sauce or the playbook already in place. That playbook compromises of our readiness with some of the solutions, which was workspace as a service, some of the platforms that allowed us, and the best way to describe it is one of my engineers telling me when I called him up, because there were a lot of these situations where the laws were not very clear, there was these lockdowns, and I decided to call a few of the engineers who were braving it up because they were moving machines to the residences of the employees. And when I called up one of the engineers, he did mention, thank you for the call, not slept for 3 days. Cops have stopped them. One of them had been hit by a lathi or the stick by the cops. But what was reassuring was that smile on the face of that engineer and actually telling me, sir, we were used to running 25 data centers. Now in our mind, we have to get prepared to run 125,000 data centers. 125,000 places where our engineers could be sharing a room with somebody. 125,000 locations where there can be a potential for a risk. The platforms that we had, which we used to sell it to our customers, now became the tools on which our command and control center, which was based on cloud, which was based on cybersecurity, which was based on AI, and which had every way that we could monitor what our engineer would do. And we were able to peep into that performance. So to me, the 343 that we had prepared ourselves for, that there would be an explosion of intelligent devices, this was an explosion. That we would take a human-centered experience .next as a bet. This was more about internally taking into account that if our human-centered experiences match up to the standards, then our customers and the governments across the globe would be happy. So I'm glad that the management team followed the edict of run, change, grow, first internally, then externally. They followed the edict of 343, and this is where my new colleague, Dilip Keshu, whom we had got on to our management team through an acquisition called Born, and which was, basically, as you know, Born is into the chief marketing officer services. Born is into human experience management, customer experience management. And Dilip, on one of our leadership calls, we used to have a leadership call almost every day, and he said, our strategy is not taken next. Our strategy is next.now, because the COVID means we need to move now. So this is really the birth of what I call Taken next.now, which is now being called next.now. Ritesh will take you through the whole branding and the communication strategy. But I'm again happy that A, experiences at Satyam, my team rallying together to become wartime generals, and Dilip Keshu branding the event internally and hence for our clients and the governments that we deal with. And we now deal with all the governments, not because we sell to them. Please remember, data has now become a subject which is important to every government. So I'm glad that 343 as a strategy, Next.Now, became the rallying cry for the company to rally together. Over the last few quarters, you have seen, yes, we started when we reported the results to you on May. Manoj clearly was not the happiest friend I have had, because the results were one of the worst that your company has reported in the last 2-3 years. But we also knew that the repair work had started, and we started calling the phase that we were in as repair, because we knew that there were gaps between the strategy, organization, process, business models, and more importantly, between our manpower planning and the way we delivered our manpower. And this whole orchestration was done by the Central Transformation Office, and they were not looking at only one vector. They were looking at every vector that influenced the organization. So let me take you through that journey, but all I can say is your faith in Tech Mahindra, our faith in the Tech Mahindra employees and the leadership is working well. The company is gradually showing improvement. Some of the sectors have become a huge counterbalance to negative growth that we might have seen in aerospace, travel, and automobile industry during those quarters, because the CME, as you know, the consumption within the houses improved. We also saw BFSI, high tech, and healthcare, but healthcare only a part of the healthcare, which improved dramatically. But overall, as I say, your company focused on cash flow generation. Your company continued to listen to you, focused on capital allocation, and we have now been able to balance our growth both across the CME and the enterprise. Now, what do I personally believe has happened during this period? We did one of our CIO conferences, and one of the CIOs from Canada again discussed the social tragedy and then looked back at us and said, if the Time story had to be rewritten, if the Time had to choose the cover page and had to say who is the Chief Digital Officer of the Year, they would choose COVID-19 as the Chief Digital Officer. Now, this in a lot of ways sums up what my client was trying to say. Guys, technology is your best friend. Guys, look at how the business models are changing. Guys, look at how to leverage BORN or MatPow into your service offerings. And guys, look at not just as the solution that you provide, but look at that solution into the mold of run, change, grow, and become a true transformation partner. Again, from my perspective, every part of the organization rallied together during this pandemic. Not that we didn't have challenges, not that everything worked smoothly, but I think the best of our team has started coming out in crisis, because we did not assume that we are in a perfect mode. We assumed that we needed to focus a lot harder on the client. We needed to go back and look at what makes Tech Mahindra successful. We actually went and spoke to few of you. We revisited all our service offerings. So the matrix that you see in front of you is a matrix which is 7 pillars of the company: engineering services, led by styling by Pininfarina, and a complete capability to today design a Tesla or an equivalent, to be able to design a mobile, to be able to design a refrigerator or a vending machine, I think is what makes us uniquely different. And when we apply that capability across all the major verticals that we have, you now realize that Tech Mahindra is in a unique position. BPS at one point of time had sudden breaks. Actually, we had a 1.5 quarters which was slow because suddenly employees not being able to come to offices, customers not able to reach out to the BPO people, processes being challenged. We had what I call a break. But the faster they change their models, the faster they came back into our business. Similarly, cybersecurity, I mean, you know the touch points have increased dramatically. 5G plus network services. 5G did not take off. But the good part was actually the spend on network services started going up. Our work for 4G actually increased. And it is the same time we actually started seeing new partnership ecosystems being developed in 5G. On the Dilip Keshu and CMO, I've already spoken, and I'm sure we will cover it as we go along. All I wanted to say is Tech Mahindra, 7 pillars. It is better than anyone else in the industry. And now our other verticals are coming to size. BFSI, manufacturing, healthcare, and high tech within the next 2 years would become billion plus. Some would become billion plus next year. Some are already billion plus, like manufacturing. I purposely did not discuss CME because we have Manish Vyas coming in and sharing his roadmap with you. I did briefly touch that the focus this time was not only on one vector. We had to take into account Next.Now as applied to a customer, Next.Now as employed to an employee, Next.Now as applied to the brand, Next.Now applied to the shareholder perception or shareholder returns. We also looked at Next.Now applied to sustainability initiatives of the company. And I personally believe that us, and we will take a few examples as we go along today, this broad-based execution across each of the parts of the flywheel or each of the vectors is showing results, and more importantly, our customer scores are improving. So I can only say is a delighted customer as the center of our universe, and us rebuilding the organization and remembering how we grew GE during Satyam days. Remembering, and forget where GE is at the moment, but I'm only trying to make a point is customer at the center of the universe, we actually started saying that client partner is the CEO. He is the person who will grow our GSK. He is the person who will grow our Metro Health. He is the person who will grow our insurance accounts. So I think customer as the center of universe, empowering and enabling our client partners, I think is leading to a perfect win-win between our customers and our people. So why are we using the word that we feel more confident about the way we will now be able to correct? And it is coincidental, and thank you, Jiten Bhai, for your confidence, because when you walked in, you actually did mention that when you looked at Manish Vyas and Manoj Bhatt or Vivek Agarwal, you have more confidence in their capabilities than we would like to project. But today, I am taking a reverse stand. I am saying is, yes, Jiten Bhai, you are right. Because the repair phase, my team has basically challenged and reimagined everything that we do. And the advantage of that reimagining is we today know which processes we need to simplify. I'm not saying everything is done. There is a lot more to be done. And we also know where are the areas where we probably need to improve in integrating some of our processes. We also need to take into account is that AI is now become oxygen. It is no longer a separate stream. And that means that AI internally and externally has to become part of the operating system of the company. So, yes, I am confident that Tech Mahindra going forward can become, as soon as the repair phase is over, which is only about a quarter and a half away, we would become a lot more predictable in the way we deliver. We will become a lot more lean and agile, and we will become, in my opinion, a lot more technology enabled internally and hence become technology enabled externally. You know, M&A is clearly a very big part of our strategy. I know some of you have individually given me feedback that we need to look at our capital allocation. I've tried explaining to you that we are a lot more disciplined in the last 24 months, but who better than my colleague Vivek to help us with how well we have been doing over the last 2 years and what will be our M&A execution strategy as we go forward. Vivek, can you join me, please?
Yeah, thanks, CP. As you know, we've spoken about our M&A strategy in the past, and it being focused on largely filling in the white spaces and capability gaps in our portfolio or our go-to-market. We focused on majority of our capital being allocated to those initiatives over the last 2 years, as you've seen from our M&A execution and the deals we have done there. At our Analyst Day event a couple of years back, I had spoken about two very basic design principles of our M&A strategy. One was integration, and second was synergy. So as we've acquired these businesses, we focused very hard on integrating and landing these businesses very well within our ecosystem, within our organization. And secondly, there is a hyper focus on how do we drive synergy. how do we drive synergy in terms of client growth, in terms of accounts? How can we be more relevant to our customers with new capabilities? As well as there has been a focus on internal integration and bringing the capabilities together, the capabilities we have within Tech Mahindra, and combining them with some of the acquired entities. And so those two principles are going to remain a mainstay of our M&A strategy, on finding the right assets, the right management team, which integrate well and which helps grow the overall business faster. CP, hand it back to you.
The other part we all need to understand is one of the lessons that I learned during my previous work with Simi on transformation was that there is no business transformation unless there is a people transformation. So I can only say is that, in a lot of ways, Harsh, as the head of our personnel, has done a phenomenal job. The phenomenal job is in terms of rallying the troops, in terms of being able to coach the existing talent, and also, create an environment where people want to be recognized because the company is also getting recognition. So I think the best person is Harsh to talk about the people transformation or the talent transformation. Why don't you come over, Harsh?
Well, thank you, CP, and you said it rightly that when we talk about talent transformation, it's all about our focus on agility and how do we create agility. And actually, this pandemic gave us an opportunity to reflect. As we did, we tried to do a leadership refresh, which basically meant we wanted to assess, develop our top 300 leaders, and also infuse talent from across the world, a very diverse talent that we have managed to infuse in the last couple of months. We also concentrated on building a young bunch of leaders, a bench of leaders, which is including the technical and the non-technical areas. And of course, talent development across function, when we talked about reversing the pyramid, was actually key. We were blessed in a way that we were recognized both nationally and internationally. Your company, ladies and gentlemen, was one of those few companies that was recognized in the top 50 of great places to work. We were actually number 21. We were also recognized as one of the best places for women to work. We won 2 Stevie Awards, one for using HR technology in COVID times, and the other, that was the Gold Stevie and the Bronze Stevie that we won for being a best employer. So I think that was the journey that we embarked upon as far as people are concerned. But over to you, CP.
Thank you again, Harsh. And I'm conscious that we did pride ourselves on some of these awards that we have got. But I'm particularly more proud of the work that we have done for CSR, the more proud of the work that we have done on sustainability. That your company is recognized globally as one of the top 30 companies in the world which is driving positive impact through our transformational work on sustainability. That CSR is not only what we do as an institute, but I think it is more as an ISR. Individual social responsibility. During this COVID times, if there is one Thanksgiving I want to be associated with, it is thank you to my heroes. Thank you to my employees who have personally cooked food and distribute it, who have driven hundreds of miles to go and feed people in the slums. There are people who have gone and become caregivers. So proud of sustainability initiatives, proud of CSR, but even more proud of ISR. So all I can say is, guys, it's a good fun improving the operating metrics of the company, but it is even more fun to be recognized by the world that we would become a net zero carbon emission by 2030. 2030 is a promise, but we will deliver much earlier than that. So thank you guys, and I know I'm like 5 minutes late, but hopefully we'll cover up as we go along. Over to you, Kaustubh.
Thank you, CP, for the interesting insights. Indeed, the future is now. Moving on to our next speaker, Ritesh Idnani, who would talk about how Tech Mahindra is reimagining experiences. Over to you, Ritesh.
Thank you, Kaustubh. Good morning, good afternoon, good evening. My name is Ritesh Idnani, and I'm responsible for the Business Process Services organization, as well as all the work we do on the software products and platforms and the experiences side from a Tech Mahindra standpoint. I'm based in New Jersey, and I've been with Tech Mahindra for 4 years. I'm here today to talk with you about how we are reimagining experiences for our customers globally. But first things first, let me use this moment to extend a little bit about what CP talked about in the context of Next.Now. We've been working for the last decade in terms of helping our organizations shape the experiences for tomorrow. In 2014, we launched what we called as Connected World, Connected Experiences. We morphed that in 2017 to Run, Change, Grow, where we started focusing on different elements of our customers' spend. In 2018, we looked at the key technology bets that were influencing our customers' spend itself to be competitive in the future. And we do believe that with all the assets that we have assembled or acquired, we are in a position to help shape the future of our customers today. And that's why TechM Next.Now. We think Next.Now allows us to imagine our customers' businesses, build it for them, and eventually run the same for them. And that, in some sense, is what I'm going to be talking about today. But let me talk a little bit first about the 5 key themes that are impacting experiences globally. First and foremost, from a consumer standpoint, we do believe hyper-personalization is here to stay. In the world of social media platforms and ever-connectedness, we've moved away from what is broad segmentation or mass segmentation to one-on-one marketing, or the power of n equal to 1, if you will. We've also looked at business models changing quite dramatically to what we are now calling as the elastic enterprise. With demand and supply becoming global, what that has meant is every brand has got to be direct to consumer. In fact, we now end up seeing a bunch of hybrid models, not just B2B or B2C, but also B2B2C. And also the need to be direct to consumer has become even more pervasive than before. Data is the new oil. I'm not going to talk a little bit about it because it's a cliched comment, but I think the importance of data and analytics and how one applies the same has become even more critical, because for companies, it has become important to collect information across different channels. In fact, the information across connected channels is going to be the next big thing that's going to shape experiences itself. And also from a foundation of the new digital economy itself, I think one of the key factors that's out there is going to be the speed of the human mind. Whether it's across countries and cities, whether it's across businesses or homes, the ability to use 5G to consume information anywhere, instantly, anytime, is going to be all pervasive. And last but not the least, the pandemic actually has shown us that it's extremely important to be resilient, be battle ready always. No company, no board wants to be in a situation which the pandemic brought on us. We don't want to be caught in any kind of an environment where we don't have a response, and a response which shapes experiences. And that's why we believe these are the 5 key themes that are shaping experiences globally. Let me dwell a little bit about the same in the form of what recent research has shown us. Traditionally, one would believe that product and price differentiation would be the key competing attributes for brands. However, recent research has shown that it is brand experience that has eclipsed product and price from a differentiation standpoint. We've moved away from what used to be a traditional unique selling proposition to a unique buying proposition that has defined experiences for customers itself. And the unique buying proposition has traditionally now cut across 3 broad areas: the brand experience, what one consumes; the behavioral experience, how one consumes; and the book of record, how an organization memorializes products, services, operations, and customers. And today, from a Tech Mahindra standpoint, as much as experience sounds a little cliched and much abused as a term, we've been able to synthesize and bring all these elements together to create memorable experiences for our customers. And it's important that we view this not in a myopic view for one element, but try and bring all these disparate, disaggregated elements together. And that's what we've been trying to do at Tech Mahindra in terms of combining the different elements to shape experiences for our customers. The market for experiences is large and growing. And I kind of gave you a flavor of this from a backdrop standpoint. Most industry reports tend to focus on one element of the experience journey itself. And we've tried to combine all of this to say that whichever report you look at, the size of the addressable market is huge. Today, give or take, it's about $140 to $200 billion that we've seen, growing at 11 to 15% CAGR. And we think in the most conservative basis, this is still a very large addressable market. And we believe that it's extremely important for us to be able to capture all the elements of the market. The way we've defined the market out here cuts across not just the core design strategy, service design, physical design side, but it also cuts across what we end up doing on the contact center operations, how we leverage customer experience in AI, analytics, business process as a service. All of these elements put together define the size of the addressable market. And what you see to the right is an example of how we've manifested the same for the telecoms vertical itself. If you think about this from an experience standpoint for the telecom vertical, it presents 4 broad opportunities. On one hand, we're talking about how we can digitize the entire journey itself, whether it cuts across order provisioning, fulfillment, and service. On the other hand, it's also about looking at the call center operations and seeing how one can embed AI, RPA-enabled solutions to help ease the life of the agent and to promote more complex human interactions. It's also about how one can create an environment for digital self-serve, where more than 30 to 60% of the interactions can be done through the use of intelligent chatbots, and only complex human queries are routed to the end source from a human standpoint. And last but not the least, the other opportunity that is also created is how do you digitize the fixed line business? These are just representative opportunities of what an entire experience means in the context of an industry vertical. And we have done the same exercise and are implementing the same for our clients across multiple industry verticals itself. The market for this, however, is disparate. It's disaggregated. And one of the things that I think we've been able to do through the ambit and the umbrella of Next.Now is to bring all these components together, whether it's customer experience and service experience. Some of the assets that we acquired in the space, whether it was Bond, MadPow, and Pininfarina, allowed us to deliver the customer experience and service experience along with the physical experience. Our core operations experience combined with our leading industry-leading capabilities in contact center outsourcing on the front office side allow us to deliver this end-to-end. And on the technology side, with some of the recent assets, complementing what we already have in-house. For instance, when we acquired the company's N3, some of the capabilities we got on the NLP and the AI side complement what we've been able to build up. This is just an illustrative map of how these different experiences are coming together to shape the future of an industry itself. And that's why we feel extremely confident in terms of being able to compete and win share in this market. So how are we doing this? If you look at the next slide, this talks a little bit about the digital transformation model itself from an experience standpoint. And that experience has got different elements from a human-centered experience standpoint. It touches all constituencies, whether it's the consumer, whether it's the customer, whether it's the government, whether it's the brand, whether it's the community, so on and so forth. However, what it also is able to do is to touch different facets of the digital transformation model itself, whether it's the culture of an organization, whether it's the processes, whether it's the infrastructure, whether it's the applications, whether it's the analytics, so on and so forth. And we are able to do all of this through defined specialisms, which allow us to shape experiences that are meaningful for our customer. And how are we able to do this? We have created a proprietary framework that we are calling as Stella, that synthesizes and brings all these experiences together itself. It could be around the brand experience, it's around the behavioral experience, and it's finally around how we synthesize and integrate this with the book of record, with the systems of engagement and the systems of innovation and insight. And all of these elements come together to allow us to not just shape the strategy and define the customer journey, but also help operationalize the same and implement it to create a full soup to nuts experience. And that's why we believe that with the end-to-end capability that we have put together and are delivering to customers, we feel we are in extremely good shape to capture a large share of this market, which is growing at a rapid pace. It also is timely in the fact that customer experiences today front and center, a boardroom priority for our customers. So let me, with this, move over to 3 specific examples of where we are implementing this for our customers. The first one that I want to give is in the banking and financial services side. This is a client of ours, a long-standing client of ours, for whom we've been doing a lot of work and was looking to be digital first in the mortgages side. It's a client in the Americas. And for those of you who know the process of taking a mortgage in the US or in Canada or in other markets, it can be an extremely painstaking and laborious process with a lot of documentation. The customer's challenge was, how do I create a digital home experience itself? And we helped shape this for the customer. If you look at some of the outcomes that we've been able to do through this, the process of applying for a mortgage itself now takes minutes. What used to take weeks to approve and fund a loan now takes 3 days. The customer never has had to go and visit the branch at all. In fact, as you see on this slide, 90% of the customers are willing to recommend this to any of their friends and acquaintances. We've won numerous awards for the experience that we've been able to shape out here as being the best digital online home loan experience from a customer standpoint. Let me shift gears to the next case study, and this is one in the retail CPG side. And this is perhaps even more relevant in some sense because it's been orchestrated during the pandemic. This is a French luxury goods manufacturer. And this is a company that was trying to figure out how best to get some of their iconic brands out through the pandemic, given the fact that their global reach was kind of reduced during this period in time. They wanted to figure out how best to create an experience across multiple channels so that they could orchestrate new behaviors from their end customers itself. We helped shape this brand experience. We helped define this across multiple channels. And we were able to provide 24/7 support across the different channels itself to operationalize the same. The net effect of it is, in fact, through the pandemic, this particular luxury goods manufacturer has had double the sales compared to what they had pre-pandemic. And this is yet another example of how experience can truly create competitive differentiation for customers globally. The last example I want to cite is an example on the telecom side. And again, this is one where we've been able to deliver this end-to-end for our customers. This is a leading telecom operator. In fact, when we started working with them, they were regarded as the worst from a customer service standpoint. And this is from all the public records that was out there. We started working with them on improving the way they ran their contact center operations. In fact, to the extent that now close to about 35 to 40% of their operations are entirely automated. We're able to process 2x the volumes at half the cost. We've been able to redesign their entire customer journey, leading to also the opportunity to actually impact by building out their technology stack on the OSS BSS side. If you think about this for a moment, all of these offerings, whether it's around the redefinition of the customer journey, whether it's around re-architecture of the technology stack, whether it's around running their contact center operations as well as their front and back office, are all manifestations of that experience itself. And when we are able to bring all these elements together, that's when we are able to deliver a truly memorable capability for our customers from a competitive differentiation standpoint. And that, in some sense, is the size of what this opportunity can represent if delivered right. In summary, we feel this is an extremely important and growing market. One of the things that we feel extremely good about is the fact that we are in a position today with the assets that we have grown internally as well as assembled through acquisitions, that we are in a position to help our customers to experience the future of an industry, but do it today. Number two, we do believe that this is a large and growing addressable market. We feel very good about our capabilities to compete in this market. And last but not the least, with everything that we have, we truly believe that we have an end-to-end capability out here. And last but not the least, if I look at our track record over the last 12 to 24 months, we've been growing in this market faster than the industry. And that's why we feel that we do have a competitive advantage in shaping experiences for our clients. Thank you, and I'm open to any questions that you might have.
Thank you, Ritesh, for elevating the experience. Our next speaker is Rajesh Chandramani. We'll talk about how data and analytics is disrupting every business.
Good evening, everyone. Thanks, Kaustubh, for giving me this opportunity to address the elite group of people. The topic which I'm going to talk about is intelligence within. I'll move on to the next slide to talk about what we do in data and AI. So we as an organization are trying to create or convert our enterprises to become data-driven and absolutely an AI-first organization. If you look at this slide, this pretty much talks about the depth and the breadth we have while we are delivering data services to our customers. We today clock more than $800 million revenues with about 10,000 associates who are delivering data solutions to over 300 customers in about 50 countries. And if you look at the top, we pretty much cover about 30 odd Fortune 500 customers with our solutions, which are absolutely industry grade across verticals. And we are also partnering with close to about 50 odd technology partners and strategic alliances to deliver value to our enterprise customers. So the mission which I am and my team is on is to create a data-driven and AI-first enterprises across the globe. Moving on to the next slide, I will take a bit of your time to check on the market trends, what we see. And these are the 4 top trends which we see across data and analytics. And I think the first one is very, very important. We all know about it. The cloud is a given. And more and more customers are choosing the cloud journey with data and analytics. And innovation is actually happening on the cloud. By 2023, as you see up there, the AI will increase 5 times, and it will become one of the top workload categories in the cloud. Also, the world of data and analytics is colliding, and we see without having the fundamentals of the data strongly positioned and harmonized, enterprises are not able to take the most advantage of the machine learning and of AI algorithms. So data becomes a fundamental foundation for what AI can deliver value to the businesses. When I look at the third trend, which is smarter, faster, and more responsible AI, we will see that more and more of enterprises, and in fact, 70% of the enterprises will shift from piloting operational AI and increase it to drive more and more analytics for them. And then the fourth market trend we talked about is the X analytics, and everything around video, audio, vibration. People are going to annotate the data and make sure that they're using data to be able to drive analytics at a very, very high pace. So that's pretty much on the market trends. And I'll move to the next slide, which talks about our growth strategy. Now, TechM wants to be a major player when it comes to data analytics and AI. And our strategy is actually fourfold. We are looking at leveraging. We have globally 1,000 customers, and we are wanting to expand and become the preferred choice for data and analytics across our 1,000 customers. So that's the endeavor which me and my team are taking on. We want to enhance our portfolio. We want to enhance the markets, and we want to enhance in the verticals. So there has been a constant demand coming across the geographies for us on the data AI, and we want to capitalize on it and go big on it. The third very important part for any company to succeed on data and analytics and AI is innovation. And we are co-innovating with our partners, our customers, and startups. In fact, we run close to about 9 labs across the globe, along with our partners, to be able to take data sets and innovate on top of data to create innovative solutions. And that leads to my fourth point, which is innovation. And for being the most innovative company, I talked about the labs. We are creating specialized AI labs with our partners. For instance, partners like IBM and Amazon and Azure are actually co-funding the AI labs. And we together are creating a larger data science community to address the resourcing challenges which the whole world is facing when it comes to data analytics and AI. So we are absolutely focused around this 4-pronged strategy to be able to grow the data and analytics business of Tech Mahindra. When I go to the next slide, now this slide talks about the complete data value chain. And as you go from the left to the right, you will see there is a lot of data being generated, and more data is being generated by enterprises across their businesses, across their lines of businesses, across their factories. And the biggest challenge we see is integrating the data. So as you move from the left of this slide to the right of the slide, you will see that the enterprises are spending a lot of money in acquiring data, integrating data, to be able to harmonize data, visualize data. And once the data is harmonized and visualized, how can I create predictive modeling so that I can become a data-driven and an actionable organization? And that's the journey most of our customers are taking. Now, yes, we are engaged with 300 customers today. We want to engage with the 1,000 customers we have across the organization and pretty much participate in this data evolution journey for our customers. On the bottom of the slide, if you see, there are some of the IPs which Tech Mahindra has been investing for decades. And we have been enhancing these IPs, which together is able to contribute across the different stages of data lifecycle management. Right from UDMF, which is the one of the most complex data migration framework for migrating truckloads of data, to Gaia, which is the umbrella product or platform for for integrating all the data and monetizing it using AI. If I move to the next slide, uh, after I want to bring forward a sample case study, and this is one of the leading bank who wanted to get into a digital journey. And how do they look at their business? Okay, the legacy have their legacy application, legacy technologies, on-prem, infrastructure. But the new banks think completely different. They want to be future edge. They want to have technologies which are futuristic. They want to have data hosted on those technologies which are futuristic. They want to have layers which will help them become data-driven, and they're putting AI at the premium in order to reimagine their engagement. And if you look at the spend, typically, and this is an example of a digital bank, would have spent about 80 to 90% on technology, where we are extremely, extremely dominant. But they also spend nowadays more and more on reimagining their business engagements, where AI plays a major role. And that's where we are building more and more AI-driven use cases, which will help a bank or a telecom operator or a retail company or a high-tech company to be able to differentiate their business and use AI to drive efficiency and an extremely different user experience. Ritesh talked in depth about the customer experience and how that plays in differentiating the businesses. But again, AI is one of the major enabler is what we see for our customers across geographies. If I move to the next slide, I wanted to bring forward to you what we are doing on AI. Okay, and if I look across the globe, we will have more than 100 AI use cases where we go across a telco or a manufacturer or a bank or an insurance company or a logistics provider and deploying our AI platforms and technologies to really enable their business. And some of the use cases where we are able to detect fraud or do a 360 degrees customer mapping, uh, checking on intelligent network operations and intelligent IT operations by enabling automation and AI ops. These are the use cases which are actually making us a preferred choice by our customers to be able to have a visible impact on their businesses and to transform the way they are imagining their business operating today. So these are some of the sample case studies which we are deploying across our 300 customers. And the endeavor is to actually super expand it to our 1,000 customers. If I go to the next slide, I think I want to take a few minutes to talk about the big bets. Now, these are the big bets for now, and these are the big bets for future, which will help us enable our ambition of actually being a data-driven and an AI-first enterprise. We know that there will be lots of money which will continue to be spent on data value management. It's a huge market if you see up there, 120 billion market by 2025, with a growth of 10%, close to 10%. And we have a dominant positioning in data value management, and we continue to play that position very, very strongly. We also have customers now who are engaging with us to harmonize their data streams and increasing data truckloads of data onto cloud. We are partnering with hyperscalers. This is a huge market. It's an 800 billion market with a very high growth of about 18%, where data would move to cloud. And we're going to talk about some of the strong partners in my following slides, where we are partnering with them, and some of the use cases where we have partnered with the cloud providers and the hyperscalers to help enterprises move their data on the cloud and harmonize the data. And of course, data monetization. All of that is being done to make sure that the enterprise is able to monetize the data. They are able to make the best use of data to enhance their business returns. When I come to AI, the three top bets which we have taken is, of course, analytics. Analytics is a huge demand in the market, and it is the largest share when it comes to AI, because people want to take the fundamentals of data and analyze it, and then get into cognitive and predict. Now, those are the three technologies where we are seeing a high growth demand from our customers, and we continue to invest in these three technologies on conversational AI, on cognitive services, and on advanced analytics. And these will be the future big bets for us as well. I'll move on to the next slide, which now focuses on our partner ecosystem. I think the fundamental for all of our big bets is our partner ecosystem. we have been, and we continue to create stronger alliances. And some of the global alliances you will see, even in my case studies, are companies like Snowflake, are companies like AWS, are companies like Azure, are companies like SaaS when it comes to analytics, companies like Microsoft. And when we look at startup ecosystem, we continuously innovating, and in particularly on the AI field, where we have partners like Altirex and H2O.ai and Databricks, where we are actually innovating on how we can migrate the data, how we can monetize the data, and how we can actually make the enterprises being data-driven and AI first. So that's pretty much on my approach in terms of our ability to be able to scale up. We see an extremely high demand from our customers to be able to monetize data, harmonize data, build data on cloud platforms and hyperscalers. That is where we are putting all our efforts and energies. I'll go on to the next two slides, which is going to talk about some of the case studies so that you're able to see the value we are able to deliver to our customers and the kind of partnership we are able to bring together on the platform to be able to deliver a real edge to our customers. Now, the first case study is one of the top leading telecom companies in Europe, which is pretty much across the globe. And we have won the contract as a single sole data provider or a data partner for them, along with Microsoft. And this is across the 9 telco NatCo operations, where we have partnered with Azure Analytics platform, and we have integrated with our IPs. And I talked about the IPs, which is Gaia for AI, Infobase for data management and metadata management, data modeling on iDecision, and the new age delivery platform for delivering the solution. And the customer has seen a huge value because moving from traditional and legacy system into something which is futuristic, harmonized. We also invested in actually a dedicated center of excellence because this particular solution is going to roll out to that 8 other opcos outside of Europe. And the objective is that we are going to improve their NPS and the customer base by giving them a harmonized view of the customer and giving them an AI-based smart decision making. And this is where the first case study ends. We extremely the project is extremely in a fast track mode, rolling out in a few opcos already, and I am hopefully next year we'll be able to report a much better results delivered out of this harmonization project. The second case study on the screen here is about an insurance company in APJ market, where it is not about moving to cloud, but it is actually creating an end-to-end transformation on their business intelligence layer. Now, this insurance company has operations across GI, life, corporate, and bank, and customers were pretty much sitting in separate databases. We actually created a new data lake. We actually replaced the legacy data warehousing applications. And this was done at 50% of the cost on what the customer had actually planned for, because we're leveraging India in a major part of delivery. We are also making sure that the project is delivered on an agile basis. And this particular solution is integrated in some of our IPs with the center of excellence, which is dedicated for the customers across their 4 businesses. So they are able to see the customers across their 4 businesses and are able to cross-sell, upsell, and effectively manage their customer databases. So absolutely an important end-to-end business intelligence transformation project for an insurance company. And this project has been a huge success for us. If I move to case study number 3, now again, this is a case study for a bank in APJ market, where we have partnered with another hyperscaler, which is AWS, Amazon Web Services. And we are together, along with our IPs and the Amazon power of data on cloud, we are working together for streamlining the data patterns, for making sure we are able to create a metadata systems, for making sure that the whole databases across their bank and systems are consolidated and integrated. And we are able to give a single source of truth across the whole enterprise. Now, again, the prime objective was to have disintegrated data to be harmonized on the cloud. And the next phase of this project, we'll see a lot of AI work, which is going to come once the data has been harmonized. So the bank is busy actually harmonizing their data farms across their businesses into one single truth, along with AWS as a strong partner and working with our IPs to speed track the movement of the data and making an impact for the money. Now, the final case study I'm going to talk about is a high-tech company, and we all have seen a huge growth and demand coming from high-tech during this COVID times. Technology companies are actually making a strong way forward, and we heard about the successful IP of Snowflake. This partnership is actually along with Snowflake for a very high-tech company in the Bay Area, where we have again integrated some of our IPs in order to fast track and integrate the data sources, and they have multiple sources. It's a very aged company, successful, and we are working along with them to be able to improve the performance of the data, to be able to improve the performance of their systems, and to bring the data quality, a high quality data at the lowest cost price to the customers, leveraging our offshore development centers and the expertise we have and the IPs which we have in order to transform very high quantum of data for this customer. So if you see around, I think I want to close the presentation with a big thank you for listening to me. But we certainly see a very high demand, and the demand is coming both, north to south and south to north. Means there's a lot of demand coming in the 80% of the spend where the technology needs to be streamlined. There's a lot of spend which is coming on the AI where the use cases are dominating. But for the AI to be successful, it is so very important that the data gets harmonized, the data is unified, and the customer is able to, and our customers are able to monetize the data, which from the foundation layer. So thank you again very much, and I look forward to a Q&A session later. Thank you.
Thank you, Rajesh. That was quite insightful. I'll now request Sudhir Nair to talk about our next session, cloudification of everything. Over to you, Sudhir.
Thank you, Rajesh and Kaustubh. From intelligence within, we will move to cloud. I'm sure all of you would be very familiar with cloud trends. Every enterprise is now gravitating towards an hybrid multi-cloud operating model. Amongst the public cloud providers, AWS continues to be ahead of the pack. Azure is actually closing on the heels. But we are also seeing a strong bias from the customer based on workloads. Be it on SAP, analytics, IoT, clients have their own preferences in terms of which is the cloud provider that they would choose from their workload standpoint. Now, from a SaaS perspective, we continue to see excellent growth rate. Salesforce is by far the leader. But you would also see that many $1 to $5 billion organizations are accelerating in excess of about 30%. Vertical SaaS is gaining significant momentum. By the way, clients are now undertaking cloud transformation not just for TCO reduction, but to help improve agility, customer experience, and speed of innovation. Now, one of the other things that you would also know about the fact of cloud providers is that more than 100 functionalities are actually getting pushed by cloud provider almost every day. So the state-of-art technology is getting delivered to customers on almost by an hour basis. There is another interesting inference. What you see on the left, is the total market share of about $484 billion. Now, this is a total of IaaS, PaaS, and SaaS. More important to note is a similar size of services play actually will get generated. As you would know, less than 15% of the workloads have actually moved to cloud, which means we are actually staring at a staggering cumulative spend of professional services in excess of about $1 trillion over the next 4 to 5 years. Before I get to Tech Mahindra's right to win in the marketplace, I wanted to take a quick moment to walk you through a typical cloud journey. It starts with advisory, determining the migration path, and then building an operating model. At this junction is when you have to make a decision in terms of application by application. Where is it that you would land upon? Is it going to be a simple lift and shift, or you would do a minor tweak to actually migrate onto cloud? Or are you planning to modernize the apps, which means that it would be cloud native development before the movement? Or replace the app with a SaaS solution. On the list of priorities, I would specifically call out data center exits. Even in the Indian context, you would know that a lot of financial services customers, as well as telecom folks, own their data centers. Now, when the workloads are moving to cloud, very soon you will see that this real estate, the power, cooling, capex spend on that will start to idle out very soon. We believe this is an excellent opportunity to monetize the data centers for those respective customers. Again, from the lens of system integrators like ourselves, just wanted to call out that SaaS implementation, application modernization, which includes cloud native development, cloud ops, and managing economics on cloud are few of the money spinners that we believe should definitely accelerate growth for SIs like us. Let's come to the state of business. From TechM's perspective, the infrastructure and cloud services revenue is in excess of $900 million. Our growth is at a clip rate of 22%. The platforms and accelerators that we have created have delivered higher yield for us. And I should call out some of them. ICOPS is for cloud operations. MPAC is our platform for hybrid multi-cloud management. Tactics, a flagship product for automation. And we have NetOps.AI, which are enabling telcos to accelerate to cloud. What you would also recognize over here is that industry leader space, ISG as well as Nelson has actually tagged us in terms of being leaders over there. There are 8 strategic partners that we have prioritized our focus onto. And the names are listed down over there. And these are the ones that we would remain heavily invested and will continue to foster relationship at executive level so that we are at the top end of the growth. Now let me come to the Tech Mahindra advantage. You would recall I had mentioned just less than 15% of the workload has moved to the cloud until date. And within those itself, we have had an opportunity to demonstrate successful execution at scale. I mean, absolutely unimaginable scale. Some of the engagement that we are currently working on has a scale of 200,000 virtual machines, a combination of instance movement, application modernization, or cloud native development. ICOPS, MPAC, NetOps.AI are a series of them which are best-in-class frameworks, platforms, and accelerators which are deployed in many cloud engagements. And this necessarily does not only ensures that the speed of execution as well as quality of delivery is top class, but it also drives us non-linear revenue. Tactics leads our way for us from a deep automation standpoint. The code that you see on the right is that of a leading cloud provider. For us, it is very refreshing to have strong believers in an ever-evolving technology space. Now, let me take this opportunity to summarize 2 cloud case references. The first one is from a leading telco. And I do believe that similar opportunities are simmering in most of the telcos. So, as a rule of thumb, even if you want to look at 2 telcos per country, you know the number of opportunities that will be in the line of sight. This particular customer has actually embarked on a journey to migrate 4,000 applications spread across 20 plus data centers, sitting on an infrastructure nothing short of 200,000 virtual machines. And the execution is planned over 3 years, right? From infrastructure to apps, thereby accelerating their journey into digitization. In this journey, as they start to exit the applications from the on-premise data center, they would be vacating the data centers. That would help them monetize those data centers, as I had stated earlier. The advantage we as in Tech Mahindra have delivered was to build scale in very quick time. Through Cloud Factory, we actually institutionalized framework-led deployment to ensure 100% automated migrations. As I speak, we are the largest partner driving this transformation program. The second one is for a leading insurance firm. It's a federated organization across 10 plus countries, 12 entities. But what's more important to note is that the single-minded objective in moving to cloud. The acceleration to cloud, was expected to be done or is expected to be done in the whole of 3 years. The contract for us was part of the total outsourcing deal, which was in excess of about $500 million. And as part of the contract, not only enablement in terms of moving to cloud, but also ensuring that they build a digital platform for future is the deliverable that we are responsible for. Finally, we have also got to deliver as a service across technology towers, literally everything on a consumption mode. That's our responsibility. Again, the advantage that we brought to table was strong understanding of domain. When you have to migrate and modernize insurance applications, it is critical to have an exceptionally good handle on business processes, application dependencies, architecting it right first time. If you align to this, then you get the best value from the cloud technologies, which is the availability, resilience, faster time to market. All of it can get adapted to best possible manner. We are still in the phase 1 of this program, but I've already achieved 100% automated deployment through CI/CD. Since it is a total outsourcing deal, we continue to be responsible for cloud operations and cloud spend management. Though I've touched largely on 2 case references, there is a series of projects we have executed across large and medium-sized companies, across multiple verticals, be it manufacturing, retail, aerospace. The ticket size of a cloud deal can be as low as just $100,000. But it's important that you get started in a client even on that initial $100,000, because that could foster into millions of dollars as time progresses. On this screen, what you see is a sample set of IPs and accelerators. This is what truly differentiates us. Even for non-cloud deals, we proactively seed platforms like MPAC, which can seamlessly move workloads from on-premise to cloud. Every leader within Tech Mahindra's goal to drive client adoption to cloud. In the second half, what you see is RACE. That's our internal initiative for reskilling 70% of our IT workforce on cloud technologies by 2024. Each of these niche skills are extremely in high demand. And I'm sure you would have picked some of these names, be it OpenShift, Kubernetes, Chef, Puppet, Ansible, Terraform, Docker, and there are many more out over there. And these are all extremely niche skills. And unless you have those skills, you cannot necessarily execute the cloud journey for a customer as the clients have to be expecting to be done by us. It's a very interesting and complex world out over there. I'll wrap this up with my last slide on our big bet. What is a critical success factor for total outsourcing and large application managed services? And this will be our #1 priority. In one of the case references, you would have picked clients wanting to exit the data centers. We believe significant opportunities will open up in that space. We have an excellent storyline for data center carve-outs, wherein cloud providers are putting the weight behind to make it a major success for them and us. The third one is scaling SaaS and hyperscalers is an absolutely no-brainer. As I said earlier, phenomenal opportunity to be tapped from the standpoint of professional services market. It's again a $1 trillion industry over the next 5 years, and our RACE initiative positions us extremely well to be a dominant player. Finally, the NetOps.AI. Telco's adoption of cloud would be a big play. We have a complete blueprint and few pilots going in this space. And this particular solution helps orchestrate across private, public, and edge clouds. You will hear more on this from Manish in the next session. This brings me to the end of the cloud session. I'm sure all of you would be watching this space very closely. Happy to take questions at the close. Thank you.
Thank you, Sudhir. That's quite an interesting play. Our next speaker is Manish Vyas, and he will talk about our biggest bet, that is 5G. Over to you, Manish.
Thank you, Kaustubh. Thank you so much. Good afternoon, everybody. Well, the most important thing to note is the evolution of the telecom industry has always had a strong synergy with the evolution in the network industry. And in more recent times, what we have seen while 4G over 3G was an iterative change in terms of speed and a better access to internet. But what it did is it changed the humanity and the industry forever. For the kind of innovation it spawned across the consumer space, in the media, well, including social media, in various different applications to create a greater level of productivity and, of course, entertainment. The reason why we are excited about 5G is while we did not see a plethora of new service providers getting launched, barring maybe a Geo, during the 4G evolution, we are already seeing an intense activity happening in Europe and in America, and of course in Asia as well, with new set of companies getting created to take advantage of the new possibilities and the new dimensions that will get added in the industry thanks to 5G. And that new dimension includes the fact that we believe, and there are enough telltale signs to believe that the enterprises and various productivity, optimization, innovation, and growth of different industrial segments will have some contribution from the network industry going forward. But that said, it is very important to recognize what are the big paradigm shifts happening with the 5G technology going forward. Most of you have read this very well. We have discussed it a couple of times, of course, but before we go and dive deeper into hence what is the Tech Mahindra strategy and the game plan and the success story to support the shift that is happening with 5G in the network industry and hence in the telecom industry, and for that matter, in the larger, broader industry per se. I think it's important to recognize some of the top tenets of the shifts that 5G is bringing. First and foremost, and I probably would be repeating this maybe one times too many, the fact is that 5G is not just about an improved connectivity. It clearly is a platform that will drive a greater customer experience for service providers. Something which all of us as customers and as investors in the ecosystem do believe that the telco industry badly needs. Number two, 5G, because it is going to be inherently built around AI, will have and enable a deeper micro-segmentation of its customers, also to drive a level of personalization that has not been seen before. Two or three very important shifts happening in the operations of how a network will be monitored and run, I think is largely because of how the technology is architected and curated. The service agility, because it is going to be extremely cloud based, and because a lot of innovation can happen on the fly real time, we will be able to take a lot of processing very closer to the user, right? With edge and with the network capacity and capability that will enable a seamless flow of data and hence allow that processing to happen. But let's face it, there is one paradox that this industry continues to face, which is while we continue to see an exponential growth in the demand for the product and services that the industry produces, we haven't seen the commensurate changes to the revenue and for that matter, increase in the margins. And that we believe is something that hopefully will be a shift as well happening as we start executing and running the networks that are built from 5G and beyond. Now, with this excitement around the enterprise business coming to play, the launch of several new service providers, and for that matter, the transformation opportunities across different service providers, coupled, of course, with the very big material changes to how a 5G network is getting built, we at Tech Mahindra are very, very clear about what our playbook is. And our playbook is really at three levels. At one, our contribution to the process of helping service providers realize both the core network as well as the various enabling platforms to drive this transformation for existing service providers and the new ones at the same time. And we will indeed go into a little bit more detail in a few minutes. Number two, it's very clear that there is finally an opportunity to help both the service providers as well as various other partners to monetize via some very interesting solutions that are industry-specific niche, but at the same time to drive a momentum around building private networks and also to drive a lot of data and analytics business that will be driven based on what we do at the edge. Right? So clearly, that's an opportunity that we have a very clear game plan around. And last but not the least, every time there is a new need and a new demand, like in the telco and in the enterprise domain, there is a huge set of activities that happen on the innovation plane inside the ecosystem. So as a firm, we are very clear that both at the network platforms level, as well as with the devices, we are going to be having a very meaningful role to play with this community. How we will be doing this time? Of course, we'll continue to leverage the immense power and capital that we have invested in our people and the talent. But at the same time, we have been continuously working on building our own IP and platforms and solutions. And at the same time, we will continue to harness deeper relationships with industry innovators, whether on the cloud side or on the core network or software aspects. And again, we will be speaking about this as well in a minute. So in a nutshell, your company is very clearly defining the playbook that we have. We believe it's a very comprehensive playbook. At the same time, we are very clear there are certain things that we will not necessarily be participating in because we want to keep this playbook aligned with your expectations in terms of how we should be continuing to grow this business going forward. So let's go and take a little deeper dive hereafter. Let's try and peel the onion as far as the service provider business is concerned. I just want to take you back into the memory lane for a second to recognize that while we started this journey late 2014 and early 2015, where we wanted to bulk up our capability to do more design, more development, more integration services in the industry. And there were some hits and misses with that strategy, but we definitely got a very solid footprint across the world with a lot of customers, a lot of capability in people, and some interesting partnerships that we adopted, via the initiatives during that way. However, I must say the last 2 years have indeed been very exciting. Whether it was to help transform a set of network applications for a very large operator and then move eventually them to the cloud, or to take advantage and build some of the best labs in the world to drive a greater integration in a virtualized environment, or for that matter to work with a very large media information services company to drive a strong cloud-native software-based enterprise network transformation. I think we clearly have laid the foundation of driving a greater innovation, and more importantly, a role that we believe is going to be called as a continuous integrator in the industry hereafter. Because an open source and an open process-based network, a cloud native, something that is going to be very data and hence AI driven, is going to be requiring the type of development and integration that's very similar to how the hyperscalers and the web-based companies have done. The question is how? How exactly are we going to be executing these very well-defined opportunities that are available to us at this point? So I want to introduce, this is not just a concept, but a platform that is very core to what we will be doing going forward. We call it the CI.Next platform, which is a combination of our own IP, our platforms, our strength in our talent and partnerships. And we are going to be, and we have already launched all these initiatives for the last several months. We will be attacking opportunities across the 5 very clear, well-defined segments. Number 1, we believe that not only the technology, but hence the supply chain inside the telco industry is getting disrupted. The success that we've seen with companies like Altiostar that we had invested in was clearly because the industry has started recognizing to unlock the potential from breaking the supply chain ecosystem. That is going to spawn a set of opportunities to integrate a network that's not just going to be a 5G native network, but more importantly, it's going to be a very open architecture. We believe that opportunity, while it will replace some of the existing dollars, but at the same time, it's going to be pretty significant over the next 5 to 7 years. Network on the cloud in terms of more and more workload getting onto the cloud, and not just of the new network components, but also some of the existing ones. Not easy, but definitely possible. Here, our differentiation, of course, is the fact that we're building a platform and a product called NetOps.AI, which in essence seamlessly allows service providers and network providers to integrate, to orchestrate, to organize, and constantly move the workloads from one platform to different. Right? This is going to be something that will be used not just by service providers, but also by the public cloud companies going forward. Third, and you already heard from Rajesh, the deep impact that we are planning and we're looking to invest and make into the data analytics and the AI space. This is where we will be driving a great level of synergies, and our intelligent ops, by leveraging a lot of cognitive technologies, is built on not only some remarkable partnerships that we have built over the years, but also around the platform called Gaia, which is so core to Tech Mahindra's strategy around AI. I don't have to tell you much about our strength and capabilities around the BSS and the OSS, but clearly from a digital OSS, since we're talking the realm of networks, is a huge opportunity. We've recently achieved some great level of success in convincing a few customers in terms of joining us in getting forward on the transformation journey to have an OSS of the future type architecture that will create an ability for service providers to manage their networks from a system standpoint way differently, and hence get ready for 5G and even beyond for that matter. And last but not the least is where we are looking to partner with the service providers is around what we will do with their enterprise network and modernize for them and for their customers going forward. So with that said, instead of me talking about it, I'm going to invite a few of our top leaders in the ecosystem to share with you some success stories that we have created with them over the last year or so in having delivered the promise that you just saw on the previous slide, in the set of opportunities and the playbook that we have defined for ourselves. So allow me to bring some of our key customers and partners to share a view with you.
We're delighted with Techem contribution in trailing the never-traveled path with us when we decided to build the world's first cloud-native network. From initial lab to state-of-the-art NOC and SOC, Techem has been with us all the way. We're further excited as we scale the relationship and take our cloud-native platform globally with Techem. Thank you.
The road to 5G benefits really start from having the automation done from the inside, primarily because of all the moving parts. Tech Mahindra actually has a lot of experience planning, designing networks. In fact, they helped us automate the plan and build process for fiber rollout we did in UK. We got up to 70% cycle time reduction, but as always, there's plenty more to do.
Tech Mahindra helped us in the transformation of our operation. The mix of knowledge of network, but also native, help us to make a significant step forward in our transformation of the network operation, especially automation and agile procedures. Now, in the corporate unit I work, we are evaluating a lot the knowledge of the virtualized work, also agile methodology, and we think that they will be a very interesting partner in the future to deal with cloud native implementation and the transformation of the operational model we want to do. So we are not only cooperating with Tech Mahindra now, but we think that we will continue cooperating in the future as we perceive them as a valuable partner. Thank you very much.
Thank you so much. With that, let's move to the very next and important, the most exciting, I must also admit, still a little unknown type of a frontier. We believe that 5G and hence the network is going to be the platform for innovation because it is largely now going to enable a lot of data processing at the edge. You'll be hearing this theme from many different people many times. We clearly believe in it, and we believe that this is not just a 5G play, this is a network evolution play for the enterprise. We're going to be continuing to see an unbelievable number of devices. We'll be seeing a lot of activity in almost every single industry from the perspective of connectivity, from the perspective of connecting their users, their customers, from driving a greater partnership with a lot of public cloud companies, a lot of transformation to how data centers are going to be architected and so on. The question is, what is our offerings? And our offerings, as far as the enterprise play is concerned, that we have constantly been discussing with both customers and partners for quite some time now, is one, we believe everything that we do for the telcos in the network space in helping them build their network is an opportunity that we are going to be taking forward to the enterprises as well, in helping them build their private networks, both on a 4G and a 5G kind of a stack. Two, I've already spoken about edge and the importance of that. Clearly, the multi-access edge compute capability and integration of that is going to be an important initiative. Our game plan here is still evolving, but at this point, in terms of the 1.0, it's clearly built around a lot of strong partnerships that we have built with some of the best companies out there in the world. And last but not the least, and this is that unknown, this is that excitement, this is that that plane of innovation that that we believe is going to create an entirely new set of industrial opportunities, which is around industrial application use cases. We are committing ourselves to several of these industries that we are very heavily invested in. However, we are clear that we are going to be taking both a product approach as well as a platform and a solution approach as we build our capabilities across the various industries. The good news is that it's not been only experimentations and only initial discussions. We have already gotten successful with some very interesting use case. I just want to talk about one where in South Africa, with a very large mining company, we are right now helping them to create, to deploy, to design, and to manage a network that of course will have a few base stations across a few towers. It's a very from a telco standpoint, it looks like a very tiny network, but recognize that this is an opportunity that doesn't exist in the current realm. It's a new set of opportunities that we are unlocking for ourselves. The main objective of these type of networks is going to be to drive a much lower cost of operation than some of the traditional networks like LANs and others. A very important tenet and pillar of these capabilities is going to be around security and a very secure network. And last but not the least, it is just like my laptop and my phone is today connected to a private network. We're talking about connecting every single moving and immovable asset that needs to be connected to this very private network in a very secure environment. So that's a very interesting opportunity, and we believe that we are probably unlocking a huge potential in this space going forward. So let's come to the very last, but definitely a very important part of our 5G strategy, which is our innovation for the ecosystem. By ecosystem, we mean what we will do with the network industry and what we will do with the devices and the device platforms going forward. There is going to be an enormous amount of R&D spend that will happen based on 5G, RAN and core both, based on what will happen for the new platforms and new softwares that will have to be created to manage this evolution. On the device side, we're not just talking about smartphones, we're talking about, of course, close to 470 to 500 new smartphones that we will see in the next couple of years. But we're talking about a lot of investments that will happen around the new industrial IoT paradigm, the new investments that will happen around 5G from a test and measurement standpoint. And we believe that our capabilities have already started getting us some incredible case studies and success across both the network as well as the device plane. So for example, we've been very busy with the company to create a lot of components to help them validate and test their emulator, their simulation technologies that they are building for 5G. The good news is, what this does is it also enables our ability to innovate for both the enterprise as well as for the service provider market as we go forward. And the other aspect that we are looking to derive out of this capability are partnerships that we can integrate as part of the Tech Mahindra reference stack for 5G and for the open platforms as we go forward. I'd like to end by saying this strategy, this success that you have just heard of, and our opportunities and the playbook that we spoke is all going to be powered by our strength around the 4 key tenets that we continue to invest in. I already spoke about NetOps.ai as well as Gaia, but another important product that we have continued to evolve is called Blue Marble. This, of course, is a combination of what we've built plus what we have acquired with Dynacommerce a couple of years ago. I think it's already getting us a remarkable positioning in the marketplace as far as the innovators are concerned. Partnerships are very important to us across all the 6 broad areas of business, and we are working with at a very deep level with some of the best innovators who are out there. Our approach to market is built around platforms, right? And that's about stitching all the capabilities and the strengths together as far as integration is concerned with CI.next, as far as management and managed services concerned around AI.next. These are two very important platforms that will enable and create that differentiation for the industry to provide a very predictable, a very cost optimum, and most importantly, drive a continuous innovation together with the customers going forward. And last, but definitely not the least, is the investments that we are constantly making into our people with our academy model. And of course, in this case, for the network industry, we have partnered with Intel to pretty much have almost the entire curriculum that they have, and we run this almost like a university uh, within Tech Mahindra as we go. So that, in a very small nutshell, is what we believe is our game plan to create a momentum and a velocity in the network, the telecom, and the enterprise domain by putting very clear building blocks, believing in these building blocks, and supporting them with the investments that is very much needed to realize this dream. Thank you so much for your attention, and I'll be available for any questions that you may have. Thank you. Over to you, Kaustubh.
Thank you, Manish. Let's hear our final speaker for tonight, Jagdish Mitra, on how all these technology bets come together to drive sustainable growth for us.
Good evening, ladies and gentlemen. You heard through the evening my colleagues talk about how the technology capabilities are being enhanced in Tech Mahindra, how we are adding to it what we call as platforms and assets and solutions that can be ready to use for scaling those key technology horizontals. My section here is primarily to talk about how those solutions are coming together and making sure that the industry, domain knowledge, and those solutions combine and create business opportunities that our customers can benefit from, true to our run, change, and grow strategy. So each of those solutions target those three vectors. And as we do that, we are also going to make sure that we share with you what the internal processes, teams, structure, technology, and tools that we are enabling the company with, our front-end team, our solutions team, our portfolio team with, so that this growth is sustainable. So this is all about bringing it all together as we sustain the business and the growth. What you heard today were stories emphasizing the need of the hour. For example, the way human-centered experiences, AI, and what we do in cloud, along with a 4G LTE network, or places where there is a high-powered network, we are being able to deliver what we call as a store-in-a-box solution. A store-in-a-box solution is something that's getting used across the board, not just in the retail business, but any business that has a B2C experience. Whether it could be a bank, it could be a hospitality, it could be a travel and logistics business, it could be a healthcare service business, or it could be a telecommunications company. This is a unique solution that we have been able to build together with all the four vectors that you see and overlay on top of it the industry use case to be able to bring the virtual and the retail experience of being in a physical retail shop together. So for example, you are in a garment shop, you could almost experience the whole solution of trying out new products, new solutions, or new garments with a smart mirror. And you're at home, you could probably walk through the retail store and get an experience sitting at home and probably pick and choose and get it delivered at home or same way. This has been a great success because we've now got more than 12 customers, not a one or two, but 12 customers now looking at these solutions and have actually engaged commercially with us. We announced a few large deals last year, one of them with a very large insurance company across the globe. That was only possible because we could bring in one of the tools and some of the solutions that you heard from our colleagues earlier. Those solutions and tools enabled us to be able to draw out a unique solution portfolio that we call transformation with a self-funding model. So when we try to bring together this transformation, it allows people to do their legacy transformation, but the benefits getting driven automatically the cost savings are funding the new technologies that they need to deploy. But what does this mean for us in the future? Our future, say for example, even in the manufacturing vertical, is a vertical today with almost, if you look at our top 50 customers in manufacturing today, something that they did not do today or earlier are something that they're today engaged in. This is our engineering cloud story. Most of the factory, most of the shop floor did not adopt cloud. But what COVID taught them, or what COVID taught us as a combined unit, is that today you need to be able to operate factories under any circumstances. And therefore, imagine the world of cloud and digital twins coming together. AI, data science, again, human-centered experience, again, a private LTE network, and moving towards a 5G network, enable you to run remote factory operations sitting wherever you are, or even set up a factory where you have raw material, but you don't have the skills to be available. That's the possibility, that's the opportunity. As we do that, you can see that the speed and scale of digital transformation just in the last 8 to 9 months has become supersonic. What did we see? In the first quarter, we saw huge focus on automation and cybersecurity because people were getting access to multiple data systems. As we moved to quarter two, people started taking more decisions around productivity solutions and started saying that let's put cloud where we have not done before. And how do we make sure that we make our supply chain more versatile? And as we start to see the last 30 to 45 days, serious experience engagement. People are trying to do service design, and you can see the results of that in our numbers that are starting to show up. 30% growth on wave 2 revenue, 20% pipeline growth in the last 6 months itself, and more than 70 plus large deal potential deals that we are working on. But the question is it the survival of the fittest or the fastest? I think it's both, because you need both to be able to be future ready. And that's what we're going to talk about. And future ready in a very sustainable manner. The sustainable growth model that we have created is a unique Tech Mahindra process called Next Best Portfolio. Next Best Portfolio is enabled by same set of technologies that we talked about right now. The same set of solutions that help us deliver the needle analysis for a business, take the sentiment and needle analysis, put it into a solution ideation, and bring that together with our TechM Next portfolio of startups and collaborators coming together. And we've created this digital transformation office, which is the function which pulls all of this together, starting from the needle analysis of the account, which actually tells you what are the challenges that that business has? What does that account have a challenge? What is the market facing as an opportunity? And through that, as CP talked about, the account at the center of every discussion. Tech Mahindra's accounts become the unit at which we need to succeed in and grow and scale. And therefore, what we've called out for every account, and we'll talk about segmentation slightly later, the NBP squad. It's a team, a squad that is named people from every one of those 4 portfolios, including the domain and including our 7 pillars, who are targeted, incentivized, not on overall growth, not on overall vertical or horizontal growth, but on that account's growth, on that account's capability to drive those portfolio services. And that delivers what some of the next best portfolio solutions that you're seeing. Obviously, a key part of what we want to retain and scale and constantly repeat is the way we do large deals. We did some significant growth, as you know, in large deals last year, and we want to make sure that this is a repeatable process. Large deals today is not a function of only responding back from the responses that our customers are giving, which is RFPs or third-party advisors. It's about creating proactive large deals. All the 2 large deals that we did, which were significantly large and mega deals, were all created proactively. So what was our learning? We're taking the same insight analysis, repeatability through the opportunity, enabling it through a team which is primarily driven through financial analysts, business analysts, and large deals, separate core team, enhanced by people that we have brought in from extremely successful deal makers across the world into this team. So this is a centralized core high-powered team that has been created, which is about driving these solutions together. And where are we getting this coaching from? We brought in a people set who think financially and creatively to be able to put these large deals into proactive approaches. That's our approach towards large deal that we have initiated in the company. As we do that, we obviously make sure that that's a set of solution portfolio that we've taken to our customers. But what we need to do also is to enhance our office, our front office, our middle office, and our back office with data and AI powered tools. And this has been in the offing for a while. And we have now launched this across the board with all our rainmakers and client partners and our solution teams across one set of data tools, which are constantly telling them what is the next set of solutions and services that the customer requires. It's almost like predictive AI coming into play, telling them what the businesses are looking at. At the heart of all this is our new age delivery platform, which we had talked about last year, but it's now enhanced over building in significant amount of data from all our projects and our CRM, all combined into one database. This one database is the heart of building TechM's Rainbow. TechM's Rainbow, which consists of these four activities of driving intelligence, influencing the deal, identifying the right opportunity, and managing the data and the customer experience in an effective manner. This enables us to drive a significant amount of segmentation through this penetration strategy. We this year segmented our accounts into the top 60, the next 300, and the next 650, classified them into four categories. Ones that need reinforced, that means there is a great potential to grow and there is headroom, we are adding and added people onto it. There are certain that are absolutely in the right cusp and they've got the right structure in the team, we are retaining them. There are a third set where we think the proposition of the teams and the structure needs to be rotated. And there's a fourth category which we are repurposing, which we are saying that people, these are not accounts that we want to invest too much time and bandwidth on. So we are bringing tremendous focus and energy on a regular basis on these set of our accounts across the company. And this is again enabled by our new age delivery, our heart of our data. As they say, data is the new oil. This oil is going to fuel our growth, and that's how we are defined it. And you can already see the demonstration of a clear outcome coming out of it. A defined set of portfolio, the four sets at the heart of our operations, and resulting into a 50% growth on digital revenue, about a 4.8% growth from quarter on quarter, and a 40% large deal growth. This is all at the back end of creating a sustainable model that will allow us to drive the growth. We started the day by talking about TechM Next Now. And this is how TechM Next Now is making its propositions felt. On one hand, we are driving the market transformation, which we talked about. You heard my colleagues talk about all the four key verticals and the technologies that we are using and how we are delivering that towards as a service offering. That's where we are going. That's where we are trying to push everything as the world moves to. But as we do the market, adapt to the market transformation, we've got to adapt our capabilities too, which is what I talked about. How we are categorizing our operations around every account category, enabling every access as a bottom of the pyramid to directly come to the database rather than cutting through the layers. That's our first goal, and leveraging knowledge management to do that. With an outcome to drive each account growth, outcome towards driving significant large deal scale up, and all towards quality of revenue driven by our digital growth. This, ladies and gentlemen, is what is Tech Mahindra's next start now. And that is normal for us. Thank you.
Thank you, Jagdish, and all the other speakers. I guess it was an interesting set of presentations that we heard today. We will now move on to the Q&A session. If you wish to ask a question, please use the raise hand feature, and we will encourage participants to come on video to ask a question and interact with our management team. I would like to welcome all our entire management team to this session, and let's give it a minute for question queue to assemble. In the meantime, let's have the video.
आवाज नहीं आ रही क्या?
नहीं, हमने तो डाला हुआ है.
you can go on mute.
Ankur, you had a question. Can you unmute yourself, come on video, and ask a question, please?
Sure. Thank you. Thank you. The management team was great presentation so far. Very, very helpful. First question, probably for CP. CP, in the past, when we've had these analyst days, you've highlighted typically a 3 or a 5 year plan in terms of, in many cases, it's been in terms of where you want to scale in over the next few years. We haven't said anything about scale this time, doubling the revenues or getting to a certain level of growth. Is that a change in direction of the firm reflecting the uncertainty you see out there, or is scale not important anymore?
So, Ankur, good observation. The only reason I have personally not focused very hard, as I told you, this time the focus is on the overall health of the whole company. And I again repeat, strategy, organization, people, process, business models, and execution capability. We're trying to bring all of these into sync, coupled with the brand image, and that is where you heard me talked about Ritesh and Dilip Keshu. So it is not that we are not, running towards a goal. We are very, very clear that growth and profitability is what you measure us every quarter on. And all I committed was that we will maintain the trajectory. Manoj, you want to add?
Yeah. So Ankur, I think one of the reasons we didn't get into some of the things we've been saying, and I'll repeat it for everybody on the call. I think first, in terms of growth, clearly, given where we are in terms of the various presentations, in terms of what we are seeing in terms of success, I think background noise. Yeah. So in terms of the win rates, etc., what we believe is that, of course, that we are going to enter a period of growth acceleration, and that is borne out by some of the things we are seeing in terms of the trends in deal wins. To me, I think most of the presentation did talk about what's happening in the marketplace in terms of digital transformation and that how it is accelerating. So I think from a perspective of growth, I think clearly that's the trend which we are seeing, that there will be an acceleration going into the next year. I think on the margin side, and I know there'll be a question on this, so I'll also repeat what we have said on margins overall, that it is our intention to improve our margins from here. So we are at about 14% in terms of EBIT. I think going into next year, we are targeting a 15% kind of EBIT. And that's the goal we have set for ourselves as a company for now. And that's something which we are well on our way to achieve. And if I look at our various aspects around portfolio synergy, around making sure that we are doing location agnostic services, I think those are all leading towards that same direction. So, but we didn't specifically have a slide because I think this was more about illustrating how we are thinking about some of the biggest trends which are happening in the marketplace, which are causing some of these success stories to happen. And that's where I think the focus was on this presentation.
Sure, thank you. No, appreciate that. Just maybe a couple of questions more from my side. One is on a very interesting presentation by Rajesh and by Sudhir on what you're doing on data and cloud. A couple of questions there. One is, do you see that a lot of your go-to-market on these two areas tend to be more horizontal, which means if you have a great success in telecom, it can be cross-sold to an enterprise client and the other way around. And number two, I remember, I think Sudhir mentioning you are open to monetization of data center for some of your clients. Does that mean you'll go asset heavy on that side, and to what extent will you go?
So let me pick the second question first before I hand it to Sudhir and Rajesh respectively. I think from our perspective, I think clearly when Sudhir is referring to monetization of data centers, that is an intent of the customer. Now there are various ways to achieve that objective, and I think from our perspective, I don't see it as a material event which will move our balance sheet towards more asset heavy deals. I think that's not what we are envisaging as we go through that journey with customers. And I think the second thing Sudhir also mentioned, and it came out in most of the presentations, I think this is also going to be an ecosystem play, and each ecosystem partner will have to play a role in terms of where are the assets going and where are the services going, and what is a mix of value between the two. I think that's the way we are playing it. But Rajesh, I think back over to you on the question on the piece around whether it is a horizontal play and is it portable across multiple verticals in terms of some of the offerings which we are seeing in the D&A space.
So Manoj, I think it's a good question, Ankur, that it is a horizontal. But when you look at the businesses, okay, the data models which the horizontal creates from a business perspective are different data models. Okay, and the algorithms or the machine learning or the algorithms which happens is on different set of data models. I mean, there is a commonality. A customer is a customer. A fraud is a fraud. A risk is a risk. But again, there are nuances, and that's how the businesses are differentiating on how they look at data and how they are able to use the data to create a user experience. So it's a horizontal. Absolutely, I have a use case. I will replicate it across. But there are nuances of the domain and nuances of the businesses which come in to solve it. Does that answer your question?
Sure, that's helpful. Thank you.
Thank you, Ankur. May I request Sandeep Agarwal to come and ask his question? Sandeep, you can mute yourself, please.
Yeah, hi, thanks and good evening, and thanks for an excellent set of presentation by all the panelists. So I have one small question from maybe CP or other panelists. So when you see this disruption which has happened because of the pandemic, and as CP very nicely said, the chief digital officer is the COVID-19. So my question is that when you see the way your clients are now talking on spending in technology, what kind of sense is it a gap fill up which has been void because of other priorities for last 4-5 years where they should have spent on technology, or you think that it's not only a gap filling exercise or skill set fulfilling exercise which may be achieved in maybe 1 year or 6 quarters, or versus a systematic change in their attitude that they want to use technology as a means of doing business going forward. So that is question number one. And question number two, which I wanted to know, is that what we are understanding when we interact with a lot of experts globally is that some kind of precedence cloud has taken over other components of digital versus what it was pre-pandemic. So what is your thought process on that, and how we are strategizing ourselves towards the opportunity from the hyperscalers? So that's all, those two questions from my side. Thank you.
Sandeep, I mean, if I answer those questions, and you know how I like to share stories, I could be here for a long time. So I'm going to request Vivek and Jagdish to take this question. But if you still need any more information, I'll chime in.
Okay. Vivek, you want to go first?
Yeah, I was hoping you will, but I think Sandeep, when you start looking at, is there a catch-up? And that was what I gathered from your first question, that is this a catch-up on spending and priorities for the first, for a defined time frame? I think the way we see this is about acceleration on adoption rate. So this isn't a time-bound jump in demand or a change in priorities for enterprises. This is about fundamentally altering the way they work and using this as an opportunity to go faster, to do newer things, which they were not willing to try, or businesses assumed that they were too disruptive. So it's a fundamental shift in mindset, and hence the demand scenario is probably going to be far more extended and prolonged than a one-time catch-up kind of a situation.
Thanks, Vivek. And Sandeep, the way if you see the examples that we put together and we kind of ask the question of Rajesh as well there, whether it is data and analytics, whether it is cloud, whether it is human-centered experience, all of these, if you take a business use case, what the customer is trying to solve, whether it's a supply chain problem or a retail guy not being able to get all his customers to come to the store, suddenly this COVID-19, and that's why that all of these need to be connected, Sandeep. And that's why TechM Next now. And I think to Vivek's point, none of them ever, it's not a set of use cases or solutions that people did not envisage in these industries. These solutions were there in place and these were people were discussing it. What has happened now is people have realized that if you have to survive in the business now because behaviors have changed, you better change it now. So that's why TechM Next now, because 3 years later, what was going to happen? Customers need those solutions today, and the guys who can provide it will be the leaders. That's the whole thought process around the whole question of the field that you are saying, what has changed fundamentally. As far as your cloud question is concerned, I think it's at the heart of everything. So earlier, while it was a commercial play of saying, can I reduce my cost by moving things from on-prem to cloud, now the cloud, for example, the example I gave you of factories being operational only if they had a digital twin in place, for example. And that digital twin was a fantasy or like cool thing to do. For example, oil and gas or manufacturing or even a telecom on the field rollout situation. Now it is no longer a cool thing to do only. It is the thing to do if you have to run your business. And cloud is at the heart of this in order for this. So cloudification, when Sudhir talked about everything becoming cloud or cloudification for everything, that's actually right now demand. And the opportunity is that 80% of workloads that have not gone to cloud. That's the opportunity for us. To answer your question, Sandeep?
Yeah, thanks a lot and very helpful.
Thank you.
Thank you, Sandeep. May I request Sudhir Guntapalli to come and ask a question? Sudhir, you can unmute yourself, please.
Yeah, thanks, Kaustubh, for the opportunity. And to the management team, just a couple of questions from my side. Earlier, we were talking about some sort of portfolio rationalization, maybe exiting some low margin geographies or low margin service offerings. What is the progress on that front?
Yeah, so let me pick that up. I think from our perspective, as we look at it, I think we have started the journey. I think it's a combination of, I would say, service offerings, geographies, and potentially customers. I think in terms of where we are able to not figure out a way where our long-term goals are being met. So something which it's a journey in progress. We've just started that journey. I think it will take the next 3 to 4 quarters for us to drive that through to its logical conclusion.
Sure, Manoj. Thanks. And my other question is, with some of the tailwinds we were talking about over the course of the presentation and some sort of growth acceleration we are hinting at, is it fair to expect, let's say, ballpark revenue growth upwards of double digits for FY22? May not be a hard guidance, but directionally, do you think that's the right kind of a range one should be looking at for our sort of a business model and a portfolio?
So I think from my perspective, and I've always thought about it this way, I think in terms of the telecom portfolio, I think we will see an acceleration going into the next year, even without 5G, is what we feel. And with the 5G, I think that, and the timing is a bit uncertain, we believe it will happen in F22. So to me, I think while we do not clearly see double-digit growth in telecom, but on the enterprise side, I think if the industry is and the trends are that there is a strong momentum and a strong funnel, I think that's something which we would be targeting towards on the enterprise side. and which would then put us maybe slightly below double digit overall. But that's the way we are going to take targets and goals for going into the next year.
Sure, Manoj. And one last question from my side. In the recent quarter, actually, it was interesting to note that the BPO margins, segmental margins in BPO were higher than even pre-COVID levels. So do you think that's a sustainable trend? Maybe that some sort of reflects some of the portfolio rejig we had done, or it'll recalibrate, let's say, in a couple of quarters from now?
So I think while BPO has had specific reasons, including, I think if you look at Q1 and Q4, we had some supply side constraints, we had some demand side constraints, and of course, if we look at the BPO business, there's a lot of cost around travel and transportation. I think those have all helped. But I think I want to answer that question broadly at the company level rather than analyze it at the portfolio level. And that's where I go back to what I tried to say, that our goal, our target for next year would be looking at that 15% kind of EBIT number. And that is given the fact that we do expect some of the travel costs to come back. And we do expect that there will be a normalization in terms of salary hikes and other employee related costs. And the levers we have for that are more around things like, as I said, we have seen trends towards more insourcing. So our subcontractor costs are something which we are trying to work on. We are also trying to work on offshoring and making our services more location agnostic. We are talking about a huge program to think about how do we make sure that our portfolio companies and work together in conjunction with us overall in terms of both the front end and the back end integration. I think all of those measures will help us as we go along into the coming quarters, and that's where I would like to leave it at a broader level than analyze each and every service line.
Thanks, Manoj. Thanks to the entire management team for the presentations. That's it from my side, and all the best.
Thank you, Sudhir.
Thanks a lot, Sudhir. May I call upon Sandeep Shah to come and ask a question? Sandeep, please unmute yourself.
Yeah, thanks. Thanks for the opportunity. The question is, in the initial remarks of Mr. C.P. Gurnani, we have said that TechM is into a repair phase. So what exactly does that mean, and will this lead to reduce the volatility in the organic sales growth and the margins volatility, which all investors actually give us a feedback that the TechM's margin is really volatile, even the organic growth is largely been volatile. So whether this repair phase will structurally address this concern as a whole?
Sorry, I was speaking on mute. So Sandeep, I think the way to look at it is, and let me give an example, probably that's the best way to think about it. We have this provider business, and maybe about 4 to 6 quarters back, we used to have this discussion around, the volatility. There's a short ramp and a big ramp down in a space of probably 3 to 4 months. So what we took that business, and as a case study, we tried to see how we can convert it to more annuity. And maybe Vivek, you want to expand on that example if you can, in terms of what is the current state of play. I know we have had a series of wins and so on and so forth. So maybe you want to spend a minute or two on how do we approach that issue around volatility in that business, and then I'll expand further on a more generic note. I think we have lost Vivek. So anyway, I think Sandeep, my thing is, what I was trying to say is, if I look at that business today, I think going into the next quarter, almost close to 40 to 50% would be more annuity based, and that's happened in a space of 4 to 6 quarters. So clearly there is a focused approach towards trying to make a revenue less volatile. The second way to look at it is in terms of, as we think about large deals, I think one of the good things which has happened in our business is the average deal size in large deals on the enterprise side. And initially we used to talk about 50 to 75, 75 to 100, and now it's almost consistently in the 100 million plus category. So that's the other way we are thinking about how do we move the average deal size up. So there's a lot of focus on reducing that element of volatility in the business. And that kind of ties back into some of the comments I made in the beginning around how we are looking at each geography and looking at each business line and analyzing the characteristics of that revenue stream or margin stream. And then as required, we are taking focused interventions to help reduce some of that volatility as we go along. And you should start seeing that as we go forward into the coming quarters.
Okay, okay. And just the second question in terms of also there was a comment about reversing the pyramid. So what do you exactly mean by the same? And Manish, the question to you last time in Q2 call, you said that there are increased discussion with most of your telco clients as well as enterprise clients related to 5G, and there could be a decision making on converting pipeline into deal wins in the next maybe 6 to 9 months. Is there any progress on the positive side?
Manish, you want to take that first?
Yeah, absolutely, Sandeep. Thank you so much. No, there indeed is a lot of progress on the digital transformation around the 5G and the enablement of 5G, including the discussions with the enterprise customers in bringing them onto the platform to start driving initial conversations around private networks, which I spoke about in one of the examples. So yes, there indeed is traction, and I'm hoping that you will hear about some of these, these dialogues in a more meaningful fashion over the next few months. But like I said in my presentation, across all the three areas, the ecosystem, the enterprises, as well as with the service providers, there is an activity around modernization, both of their existing networks moving onto the same transformation journey, and at the same time adoption of the 5G. So the answer is yes.
And Harsh, can you talk a bit about the reversing the pyramid bit? What are the initiatives and how are we thinking through it across multiple layers?
Your line is on mute, Harsh. Yeah, sorry. When we were talking about the whole concept of agility and how do we get agility into the system, the whole idea was how to empower the field, how to make sure that decision making is pushed to the field to be making it more agile. And I think that's the whole concept of reversing the pyramid that we are working on. It also includes the fact that how can we get younger blood into the workforce? How do we empower them, and how do we make them take decisions quickly and faster than what they're doing today? So it's a set of processes, it's a set of the right people in the right job, and it is also about empowering the ground. And for us, really, the key is about account managers or client partners, and how do we make them feel empowered to run their accounts better, faster, and with more agility. I think that's the whole concept of what we talk about reversing the pyramid, is taking decision making right to the ground.
Okay, thank you, and all the best to the management team.
Thank you,
Thank you,
Sandeep. May I request Mukul Garg to come and ask a question, Mukul?
Thank you. I have a few quick one for Manish. Manish, you mentioned about network services 3.2. How should we quantify this business going forward? You gave quite a few areas where businesses, the opportunities are there, but you scaled back this business few years ago, and now that the opportunities are again coming back, should we assume that this will be a larger part of overall telecom practice?
Thank you, Mukul. Yes, you should assume that the network at all the 5 areas that I mentioned about in the telecom space, 2 areas we spoke about in the industry, what we are calling as ecosystem, and the three areas we are talking about in the enterprise. So these 5+3+2, these 10 portfolio areas indeed are going to contribute a significant part of that you will. It's already showing the signs of an increased activity, including in our current portfolio as we speak. So I think with the as the OSS of the future gets transformed, which is the system IP space of network, as the new networks get deployed, as the 5G related open networks get instituted more, we do believe that this will continue to become, and hence not just for the telecom space, by the way, even for the enterprise space, we believe, and it may not be a very big part of that business initially, but clearly will be a growth engine.
And do you need to bring in some inorganic capabilities from outside to complement your 5G offerings, especially after the sale of LTO Star to Rakuten, a little while back?
Yeah, so 2 points. So Altio Star and Rakuten, the most preferred partner with both Altio Star as well as Rakuten communication platform RCP as investment strategy is built around all three. We'll partner with the industry leaders, whether the cloud companies or people like RCP. We will build and bring our IP. So we are building a platform called netops.ai, which quote unquote is like an orchestration continuous integration platform. So we don't believe we need to buy any company in that space because not too many companies have that level of mature capability. So it's an organic investment and a development R&D that we will do ourselves. But at the same time, there are areas like analytics, areas like network security, where we will be continuously seeking and scouting for the right asset. If it comes through, we will definitely be considering it. But at this point, we believe for the strategy that I defined, I think the people, the skill development, the partnerships, and the IP that is needed, I think we feel very good about.
Understood. And I think this question is for Manoj on the telecom side. Manoj, you mentioned that next year you expect telecom revenues to grow, but given the pressure we went through in FY21, FY22, obviously the growth should be much faster. What's your view from FY23 onwards, and purely from a qualitative terms, given that 5G obviously will be a much larger opportunity by then? How should we see the medium to long term growth opportunity on the telecom side? Will that be a kind of going back to 3G to 4G migration opportunity, or is there anything different this time?
And I'll start it, Mukul, but I will request Manish to add. But I think what we have seen is that obviously, being a cyclical vertical, we have always seen that when the beginning of the network technology change cycle starts, we do see substantial acceleration in the growth. And we all believe that we are at the beginning of one. And that would mean a very good growth potential in the telecom vertical, both from whatever Manish said in his presentation, from all of those two buckets. One is the ecosystem play and one is the CSP play. Both of them, many of them would fall in the telecom bracket. But I think to give more color, Manish, you want to add anything in terms of as we look at the next few years, maybe 3 years or so, how do we see this market play out in terms of our acceleration in growth?
You have to go back to the matrix slide that CP presented, which is these three things together. That matrix slide where we're talking about all our, not just network and not just BSS, OSS, but also engineering, security, platforms, the business that Dilip Keshu runs in the CMO space, all of those coming together. Today, while we have the access rights with almost all the major service providers, we do not do all these things for them. So our strategy will continue to be to grow the other areas from the same customers, beyond the IT and the network and the BPO. So that's part one. Part two, and hence your question about as the network evolution happens, we will continue to get capabilities there, particularly as the supply chain gets disrupted, right? I mean, they will not be relying on only a 3 or 4 companies. They will rely on a lot more as the technology unlocks itself in terms of the architecture. Part two is, of course, the fact that we will be continuously working with them more on the digital transformation rather than on the cost transformation only. And we believe that's an opportunity that will open up as we go forward. But the part three, which is a dependency, that we all need to watch out very carefully for, is the paradox I spoke about, which is it remains to be seen how with 5G and beyond, the service provider industry will break this, this interesting puzzle that they are in, where their revenues and margins always are under pressure while the demand of data continues to go up from increasingly now from video. So while a lot of work happens on their business model, I think it will have some level of impact on how we shape up as well. But we feel pretty all right about the 7 pillars and the very specific investments that we are making in the network and the digital space.
Understood. I think that was quite comprehensive. Thanks for taking my questions, and best of luck for the rest of the year.
Thank you.
Thank you, Mukul. May I request Nirav Dalal to ask his question, please? Nirav, please unmute your line.
Yeah, hi. Thank you for the opportunity. I had a question on telecom as well as enterprise. In terms of telecom, how do you see the competition changing for you, say from 2G to 3G? So we had a different competition, 2G to 3G, 3G to 4G, and how does it change in 5G as the network disintegrates? That is one part of the second. And secondly, then on the enterprise side, how do you see yourself with this 5G added strength to you on the enterprise side? So,
Manish, you want to pick up those two?
Sure. I'll rather probably hand over to Jagdish to address the 5G questions from an enterprise standpoint, to elaborate on whatever he and I presented both. But let me take the first part of your question. As far as competition is concerned, that clearly is going to be, there are 2 areas, and I'll answer that question in 2 ways. One, we are also becoming a competitor to people that we were not competitors to in the 3G and 4G world, right? Because of the disruption that is happening in the technology, the architecture, and the supply chain. We were not earlier going and becoming the leader for implementing an IP or a transport network, right? We don't have too many case studies like that in the last 10 years. We will increasingly now seeing some of those businesses happen because we are entering somebody else's space via partnership and via some IP. On the other hand, you're right, our competitive landscape is changing. That is largely because of the areas that we are competing in. And the way to look at it is we are not 1 or 2 businesses anymore, we are 7 different businesses. So Rajesh's business into telecom has a different set of competitors. Sudhir's business into telecom from a cloud standpoint has a different set of competitors. The business that people like Manish Mangal and Satish run in the network space have a different set of competitor as well going forward. So I think it's a mixed bag, and I think it's not any more a very simplified architecture from a competition standpoint. It's a complex architecture, and hence the investments that we are making, into Harsha's point, is in people and leadership that understand this complexity and bring the necessary domain understanding in each of these areas, because we ultimately we are like the Amazon.com or the Walmart.com of providing services to a telecom and a media customer. and hence we compete with very different type of people in that space. I hope that answers your question, but I'll invite Jagdish to answer the enterprise 5G part.
Thanks, Manish. So the enterprise 5G, actually, if you are to understand, that's why we put together a program. Our internal program is incidentally called Catamaran. It's only because the whole journey starts pretty much from the setting up of privatizing and engaging those networks in a factory first, as an example, and then the applications and the service on top of it. So just to give you an idea about how we are approaching it and the market size, the way we are approaching it is 2 points. Okay, so the whole idea is at the end of the day, about $3 billion odd 5G for enterprise market was predicted. And it doesn't seem to be too large as it starts to grow. But here, wait for some of the numbers that are coming together. In about 2026, this market is supposed to be about 31 billion. So about a 54 odd % CAGR on top of that growth is what we are preparing for. And how is TechM preparing for it? Especially for all our verticals, manufacturing, even BFSI, retail, oil and gas, and travel transport. In each of these areas, the collaboration of the network setup and then the use cases around applications is what we have built with our partner ecosystem. What we are doing now is every network transformation opportunity that you heard from Manish to speak about is where we are going in and saying that not only do we do the access network and the core network part of it, but we'll also do the services around platform and software and end user capability that we can deliver on top of it. So we've today approximately about a pipeline which is cuts across about 30 odd customers is what we can say in 5G for enterprise. But this is only the beginning. And I think if we can get these things right, the scale, as we said, is approximately about 40-50% CAGR if this adoption happens as we move forward on 5G for enterprise.
Just one last question point. In terms of the size of the deal sizes for these 5G for enterprise, how should one look at it?
Oh, so very similar to certain extent what Sudhir talked about in cloud. So it depends where you start off from. So in some cases, we are seeing deal sizes of 200 to 250K in terms of getting the consulting going, in terms of telling them what the whole the core network change or the SD and NFB deployment architecture should look like, to things which are running up to approximately about high single-digit $1 million at the moment. So that's the range at which we are operating, from 250K to approximately about $7-8 million of deal sizes that you can look at. But a lot of it is depending on the industry and the customer. Have people made progresses? So people with factory, and if you look at the regions, Europe and North America, primarily at the lead, and within that, the folks who are in the manufacturing business are the ones who are on the lead. So that's the nature of the business now.
Thank you.
Thank you, Neerav.
Thank you.
We'll take our last question for today from Dipesh Mehta. Dipesh, go ahead and ask your question.
Yeah, thanks for the opportunity. I have a few questions. So first question is about how do you expect 5G shaping our growth trajectory? We are focusing on three segments: CSP, enterprise, and ecosystem. So if you can provide perspective how CSP and enterprise ecosystem changing growth trajectory for us. Now CME, I think in Manoj suggested double-digit growth. We are not looking at least for next year. But what factors need to be in place to see CME growing in double digits? If you can provide some perspective there. Then I have follow-up, but if you can answer this question first.
You want to take that question?
Oh, sure. I didn't understand the second part of your question, Dipesh, but I think you were asking what will it take for growth to continue? Is that how I understood?
What it will take to grow double digit? Now, Manoj earlier suggested it unlikely at least in next year.
Right. So let me address both your questions. Of course, I've said whatever I could in terms of our strategy, our portfolio. Uh, I don't think I'll be able to give you any different answer, Dipesh, in terms of what we will do. The only thing I would like to add in addition to whatever I have said is the execution part, because ultimately there is a market, there is a demand, there is a trend that is coming because of the need for the service providers to offer new connectivity, new digital services to their customers. There is a demand, hence within the ecosystem, which is the industry, both on device and network side, to continue to build new products and innovation, something that we will offer as an engineering capability and integration capability. And what Jagdish highlighted is the opportunity to support the enterprises as they integrate more and more network capability within them, so that they have a more secure and a more agile infrastructure going forward. So I don't think any of that is going to be new or different than what I have already said. The big differentiation will come, and that probably will answer the question on how we will drive growth, is a combination of what you heard CP speak about, reversing the pyramid and taking or handing over the keys of our game plan to the CEOs of our accounts, as we call them. So our account game plan is, because we believe Tech Mahindra and your company has written the book on scaling accounts. I think we will be doing more and more of that going forward. Number one. Number two, we are investing in people and leadership that will bring capabilities, industry, world-class capability in networks, in product engineering, in product and platforms. And again, I can go on, but essentially is an execution rigor that we will be driving across all of this, plug the holes that we needed to plug for a while, where the tailwind is there, and at the same time defocus from areas that maybe suck our bandwidth and we have not gotten the necessary results. Doesn't mean that we will not take some more risk, but once we took the risk and once we found out what the returns are, we are not going to stay invested in those. Get back and keep focusing our limited bandwidth on the right areas. So I think it's in many ways it is going back to the best at basics, while keeping a very close eye on the trends and hence where we need to support. So I guess it's really all of that that will help us.
Another question which I have about large deal related thing and expected revenue acceleration. Now we have relatively softer H1 in terms of deal intake. So if you can provide some color around pipeline, size of the opportunity, and any changes you are witnessing in deal closure timeline, whether it is happening on time or bit delayed, or whichever you can provide some perspective. And the second question is about capital allocation. We have recently declared special dividend. Now, whether special dividend would be part of your normal capital allocation, it is over and above. So whether it is generally balance sheet where you want to reduce gas, or it would be considered as normal payout. So if you can provide that perspective, thank you.
So what I'll do is, let me pick the capital allocation question first, and then go to um, Manish and Jagdish, maybe a bit of color on how we are seeing deal flow. But on capital allocation, I think we have been very clear that apart from what we choose to invest, whether it is for organic or otherwise, in our business, our intent is to return most of the capital back. And you have seen that definitive trend. If I look at F19, I think we almost gave away all of our free cash flow. Even F20, the special dividend is more thinking around, if you remember, we actually did not give the full dividend out in the month of May because of the COVID pandemic. And since we have had exceptionally strong cash flows coming through in the first 2 quarters, and both of them have been record quarters for us, I think we decided that we should reward and share in this with all our shareholders. And I think you should expect that the philosophy around return of capital will remain the same even going forward. And that's something which we intend to continue as a means for making sure that we will not build up a huge war chest in terms of cash, given that we have the ability to raise cash at very favorable terms if we do ever require to. So I think that's something it's a policy decision we are making to increase our capital allocation and increase our capital return to shareholders overall. I think broadly on the deal pipeline, maybe Jagdish, you want to start first, and then maybe Manish or you can add.
Yeah, sure. So on the deal pipeline and on the deal flow, I think, as we said, I think last time as well, it's probably the healthiest deal pipeline in at least 4 quarters that we are in today, if not more. And that deal pipeline consists of the good part of the deal pipeline consists of that it is, as Manoj said, a significant number of deals in our sweet spot size. So in that category of 75 and above type of a deal size for large deals, and with some significant number on the below number. So from a deal flow perspective, I don't think the deal pipeline is a concern. We're probably at about the highest, as I said. The thing now that we have to look at between Q3 and Q4 and some of these others is the closure time frame, because some of these are now up for movement towards closure, and the decision making at the customer level in terms of closing or forwarding it to next quarter will define what's going to happen in Q3 and Q4 for these deals. And as far as large deals, as I mentioned, is we are moving our strategy significantly. See, at the end of the day, the strategy is got only 3 vectors which all companies follow. So it doesn't change too much. The 3 vectors being mapping advisors, responding to the RFP categories, and then creating deals together. And I think, as I said, our learning both from a CME and an enterprise perspective, especially for the largest of deals, which came to almost $1 billion each, was that they are best seeded by us. So the focus and the energy, as I talked about, we built a special team in large deals, and we enhanced that almost by 200% this year of adding specialists onto it. That team's focus is primarily on creating deals and pushing them proactively, because that's where we see the next generation of success coming. Manish?
I don't think I want to, there is much to add to that. I think you answered that question, Jagdish.
Good. Thank you, Dipesh. Thank you for the question. We'll just take one last question from the lines of Kawaljeet Saluja. Kawaljeet, go ahead and ask your question, please.
Guys, great presentation. Congratulations on it. Just a quick couple of questions. Most of them have been answered. First is to Manish. Manish, there was a slide in which you mentioned that there are well-defined opportunities in 5G across open 5G networks, network on the cloud, and there were some numbers on it. What is the source of that, and what's the kind of market share that you're gunning for, in this opportunity for the next 5 years?
Well, thank you so much for that question, Kawaljeet. I think the market share is still an evolving, or will probably evolve over the next few years in terms of defining the split in the pie. For a simple reason, I think somebody asked a question earlier on how do you define the competition, because different people will try and address the same problem from a different vantage point. You will have a hardware company that will probably also do a little bit, some of our core business will be an adjacency for them, and some of our core businesses are going to eat into their adjacencies as well. The source of the growth that we are expecting is largely coming in from a couple of analysts that we have spoken to, that we have been doing inquiry calls with, some of the leading analysts. And it is largely coming from the fact that, so I did say during my presentation, I hope you caught that it may not necessarily be new dollars. It could be replacement dollars of an existing spend because of how they will be reallocating their capital as well as their operating budgets to enable, for example, an OSS transformation could also be funded largely from an OPEX standpoint, not necessarily build new systems and hence put new capital dollars on. As far as market share in things like OSS is concerned, I think we'll continue to drive a good double-digit type of a market share in areas like Open RAN and 5G. I think it will start with very, very minuscule levels initially, but hopefully will grow over a period of time.
Just to get this right, when you say open 5G network opportunity of $40 to $50 billion, it is essentially revenue opportunity in the non-traditional area, which is revenue opportunity which excludes the opportunity captured by the traditional telecom OEMs, which is the likes of Ericsson, Huawei, and others.
Right. So $40 to $50 billion is the total spend we expect in the open 5G, but it will be shared by different members in the ecosystem. By the word open means there will be people who will bring the RAN technology. There will be people who will bring a packet core or core technology, as we call. There will be system integrators. There will be people like Intel or Qualcomm that will bring the compute capability. So that you're right, that money is going to get split. Instead of going to one or two or three companies as it has gone in the 3G and 4G era, it will now get split and go to multiple. Our addressable market there could also substantially be large.
What are the true services opportunity within that? In that $40 to $50 billion, it will be significant.
It could be anything between 20% in one of those vectors to as high as 50-60% in some of the others.
Okay. The second, another question that just came to my mind, Manish, is that a few years back, providing or partnering with the IT services arm of telecom companies used to be a major opportunity. Does that opportunity still exist, or cloud has effectively killed that opportunity away along with the companies?
No, that opportunity does exist, and it's something that we have a solid focus on. The 5G for enterprise and collaborating with them for both private networks as well as use cases is something that we are running a lot of laboratories on as we speak. We also have had a couple of wins in the enterprise domain. The very large insurance deal, the media and the insurance and the information services win that we had last year, all of them have significant telco play. But in each of these cases, they are working behind us. But they have gone to market together in helping us win those deals going forward. And in some cases, there have been more than one operator that has been part of the solution.
On that. And just a final question for Manoj. Manoj, what's the kind of revenue impact you expect from the geographical/client/service line rationalization that you're undertaking?
So Kawaljeet, I don't anticipate a material impact to whatever we are talking about. Because as I said, we are moving in phases. There are probably I would look at it as a more disproportionate impact on some of the non-profitable lines which we are trying to rationalize. I think there might be more of an impact on margins rather than on revenue, because there are some clearly identifiable areas where we need to act upon in some geographies and in terms of some service lines. So I don't anticipate much of a revenue impact.
Thank you so much, and all the best.
Thanks, Kawaljeet.
Thank you, Kawaljeet, and thank you all for joining us today. With this, we have come to the end of this event. If there are any outstanding questions, please feel free to reach out to us, and we'll be happy to answer that offline. Also, there will be a feedback form that will show up here. I would appreciate your valuable feedback on the event. Lastly, all the presentations will be uploaded to the event website in the next few minutes for your reference. Thank you all again, and thanks a lot all the speakers for joining us.
Thank you, everybody.